Welcome to The Mortgage Life, a space for down-to-earth conversations about how mortgages contribute to your life.
Well, that sounds canned and maybe a little boring.
What? There are so many parts to the mortgage industry and real estate finance we can explore and share with our listeners.
Okay, you're right. You're right, Mindy. Our goal is to help secure our clients' financial future.
I'm Pete Solomosi.
I'm Mindy Bodwin.
And I'm Sue Solomosi. We're your hosts. Welcome to The Mortgage Life.
So this is an episode we've been talking about recording for quite some time. We work with accountants a lot when we're looking at mortgage applications with our clients. And it also took us a while to figure out which accountant we would be working with on this particular episode.
So today we have with us Murray Smith from KPMG here in Vernon. Welcome.
Thank you. Thanks for having me. So
Murray and I go way back because we both graduated from UBC Bachelor of Commerce back in 1999. Yes, I'm dating you, Murray, and myself. So we were the two guys that actually had the names that were right next to each other in the convocation ceremony. So the two Vernon boys, here we are.
I was just moving and saw that some grad book and saw those pictures. We look pretty much the same. So
I think so. Yeah.
That's a positive note.
Or a lie.
I was trying to keep my laugh silent, but I don't think it was so silent. Exactly the same.
Isn't there like two truths and a lie? So we're
right.
We're down a lie.
We were actually in our kids' high school last week, and Pete and I both also graduated from that high school. So we went searching for ourselves on the walls. It was exactly the same sentiment. We look exactly the same.
Exactly.
So welcome to The Mortgage Life, Murray. Why don't you give us a little introduction to you and what you do?
Oh, what do I do? Okay, well, as Pete said, I'm at KPMG, and once I graduated in '99, I started my articling here, and I got into the whole accounting thing sort of midstream in my commerce program, and looked at it as a great way to have an interesting, challenging career that's very portable, and wanted to come back to Vernon to do my articling, and just haven't left. They haven't gotten rid of me. So, but I think that's a great thing about the designation is that it's very portable. You can go international, big city, small town. And, now this whole work remote thing is a thing 25 years later or 20 years later from when I started. That even makes it even easier, but I guess maybe more common with other professions. But so what do I do here at KPMG? Well, I think we're a bit generalist here in the Okanagan in a smaller market. So we have clients large and small. We do financial reporting, we do tax, we give some business advice, help people with their financing decisions, all that kind of stuff. So and within our office, we have about 35 people, and we have people that are a little more specialized in one area or the other. So, but we all work together as a team. We have someone that's like our GST guru, which, for real estate transactions is a thing. And, all the different sort of types of taxes, non-resident, UHT reporting, again, to financial reporting, we kind of do it all, but we do have a great resource in our group here, as well as other KPMG office that we draw upon. So that's what I like about it. You can't know everything, but you have the resources at your fingertips and relationships to draw upon and get the right advice to get the right answer.
That makes sense because it's changing all the time too, right? All these rules keep it changing.
Oh, yeah.
And I think it also speaks to a common thread that we've talked about on this podcast is building your trusted team. Whether you're going through a residential purchase, a real estate transaction of some kind, or just life in general, having an accountant on your trusted team of advisors is super important.
The one thing too, when it gets into property decisions and things like that, that's where the tricky thing is, like for a lawyer, an accountant, financial advisor, mortgage broker, like everybody working together, but staying in their lane and trying not to go too far outside of your lane in terms of your area expertise. I think that's a bit of the trick, because people always ask you your opinion on things, but but I think the more opinions you can get from the different types of advisors, the better decision you're going to make.
And it's true that sometimes the client doesn't know who to ask, so they just ask.
Yeah. Every person usually has a different advisor that they lean on the most as sort of that anchor, but then draw upon other resources as well. So I think that's the role we play a lot. So But I mean, you probably, I don't know, in your world, if people probably ask you legal questions and tax questions, and you probably can start to answer, but then once it gets to a certain point, you say, okay, go talk to the expert.
Yeah. That's part of our due
Absolutely.
diligence, is to really recognize that.
And part of our goal of having people like yourself on our podcast, right? Lets our clients know that there's other professionals out there that can provide different advice.
So when it comes to an accountant, we think of accountants kind of at one time of the year, which is tax season. But we find that for a lot of the things that we do, we have accountants connecting with us and really providing us with a lot of documentation throughout at any point of the year because of the transaction for real estate. So I guess what I wanted to ask is, how do you see yourself as an accountant fitting into that client's situation? Are you just wanting to see them at tax time, or is that something that you see that yourself with them all the time, like advising throughout the year?
Yeah, I think it's really transaction based. So yeah, you have your annual reporting cycle if it's corporate and or personal. So you have that touch point. But yeah, when you're getting involved in some significant decision like buying a property, and there's the mortgage lending application process, and think some clients are more complex and more needy, I guess, from terms of their accountant. Owners of their company, when they have like some sort of dividend mix. If you have some, I'm sure you have a client that has a really nice, healthy, solid T4 employment income. It's pretty simple, but you get into a business owner, and some tax planning might make your income a little lumpy over the years, and the bank's got to wrap their head around that. So that tends to be where we get involved with the supporting documentation and the story around it and coaching through it.
And so then in that sort of broader category of being self-employed, which we were just talking about, from our perspective, there's two silos that we try to fit them all into. It's either you're incorporated or you're a sole proprietor. Are there any tax strategies or top 3 strategies that you would say for either of those two sort of broader groups?
Yeah, that's a common question. So yeah, they're self-employed, and should I incorporate? So it tends to be around, there's a bit of the risk around, getting sued and all that thing, separating some personal assets from business assets. But, effectively for us, it's the decision point is when you're going to start leaving money behind. So you start making money in the company that's in excess of what you need to live off of, because that's where you really get the power of being incorporated, because you're getting taxed, say, at 11% on your first 500,000, and you got more to reinvest. Or whether it's in your core business or in other real estate properties or whatever, but you got 89 cents on the dollar to invest. But if you're just spending it all anyways, there's no great advantage to incorporating. And there's a few extra things you can write off as incorporated versus self-employed kind of thing. So, but not that dramatically different. But I think it's that really you're starting to make an amount of money that's in excess of what you need to live off of. Or maybe you have some other things you're living off of, and you can sort of build that wealth within your company. So I think that's the main driver.
When you throw in an extra complication like investment properties, that adds extra line items, I'm sure, on that T1 general.
Yeah, and again, I think for investment properties, that's where if you have a lot of clients where they got they got a business, they might have a holdco, and they can defer a bunch of the tax and reinvest that 89 cent on the dollar kind of thing after paying your 11% tax. And then when you do that and you leverage off of bank financing, and then that's where you can really start to get some growth in your investment in, say, a real estate property.
Where tax planning becomes a whole lot more strategic.
Yes. And as like some lenders don't like properties within a corporate world is more complicated. So sometimes there's clients that sort of do it personally and then throw it into the company, and it gets a little twists like that.
Yeah, we run into situations where, say, there's a doctor operating under their corp, and then they want to buy investment properties. They'll spin off a quick holdco, thinking that that's a smoother way of doing it. But there's pros and cons, right?
Yeah, and then it gets into recreational properties and personal use and all that fun stuff, and so. but it tends to still be advantageous to have it in a corp and get that tax deferral thing working for you. But you do have to be mindful of the rules around personal use on these recreational properties and sort of run the numbers there and just be aware of what the rules are. We tend to be the one giving the bad news, and then clients are annoyed because they were unaware of something.
Quick question on the recreational properties just popped into my mind. The federal government's announced changes to tax write-offs for short-term rentals. Is that like actually going to happen, or is this just have you guys come into your world yet?
Short-term rentals, yeah, I think so. Those are sort of evolving. I haven't dug too deep into them. It's mostly been focused on, say, UHT for non-resident owners, and then these changes with the short-term rentals and the impacts of that. What's gonna happen?
What's UHT?
UHT is underutilized housing tax. So this is where
vacancy tax.
Yeah.
Speculative.
So if there's, a non-resident owner of a property, they're not using it enough for personal use, they're paying an extra tax on it. So, and there's different exemptions for different zones, but generally, if you're a Canadian, you are not paying this tax, but you may have a filing obligation. So, and that's was rolled out and deferred again, and so there's talk of that maybe going away or changes to it, because it's been a lot of brain damage getting that up to speed, and who has to file, not file, who has to pay, and there's been a lot of paperwork around that with not much actually taxes being paid. It does have an impact on the local market, like the Australians are owning up at Silver Star or whatever and not coming enough. So
yeah, because I think Vernon was just included in the speculation tax area, right?
They got expanded this way.
Yeah. So there's all sorts of rules, and every individual is different, and what are they using the property for? So that's again where it's good to talk to your accountant and just understand what your obligations are, again, for personal use or GST issues, all that fun stuff.
I was going to ask, so we talked a little bit about how we're being strategic about how the properties are set up. You've talked a little bit about how the businesses might set up their accounting records, whether it's a sole proprietor or a corporation. I'm curious, though, I see ads for it all the time, very tech-heavy bookkeeping type programs. So how has technology affected your business and your clients that come to you? I assume most people don't come with shoe boxes full of receipts anymore.
Well, we definitely have a few of those. But I think, there is a lot of software, being able to download bank statement information and like put that into accounting software has gotten a lot better. But it still helps. Some people can do it on their own, but it tends to be pay off to have a good bookkeeper that can just do that for you, that lives in that world and can make it all happen. Otherwise, it might be a digital shoebox, but it's still a shoebox. Someone's got to pull all that information together. So having just a regimen to have a monthly, quarterly program, get someone to do it for you if you're not wired to do it yourself, and just stay on top of it. Otherwise, it just builds up and it's a big mess. So
gotcha.
I've sort of the bookkeeping thing. I've kind of likened it. One scenario is like running a marathon. If you're training for a marathon, it probably doesn't help to run like 26 miles the day before. It's good to like kind of run throughout the year and stay in decent shape, and then go push it, right? But
yes,
that's kind of like the shoebox thing of like just building it all up. I'm just going to do it all at once. Like it just doesn't help.
It's painful.
Becomes a little overwhelming.
If you're looking at technology for bookkeeping purposes, is there any other space in accounting where you would lean on technology?
Well, for us, it's getting the core stuff is getting more seamless, just with CRA and sort of connecting to what they have in their database and getting that data entry piece of it on the basic stuff into a tax return is getting a lot better. And just even how we exchange information with clients is getting smoother, how they can access their information and financial statements to give to you guys to provide to the lenders and all that. We're kind of sort of revamping how we're doing all that, and that's getting better. And some clients are more tech savvy than others and are utilizing those, but I think for us on the CRA Connect piece of it, of getting the basics, it allows us to focus more on the weird stuff, which is sort of what we're better at anyways, is that the business stuff, the rental stuff,
It's the customized plan, right? The customized plan for your clients.
Yeah, and without having to spend as much time on the basics. So
yeah.
Well, a significant technology development since I've become a mortgage broker, so 12 years. My favorite tax document is the T1 General, all the pages. And when I first started, most often clients had this in paper form. So we would receive it, have to photocopy it or fax it. And at least now this is electronic. So not quite very technologically advanced, but a big advancement in the past 12 years for me.
Oh, yeah.
Okay, so Murray, big question on this. T1 General, we ask for it from our clients, and you guys will know because if you're listening to our podcast, we've said document collection super important. T1 General is a big document. Sometimes it can be, 60, 70 pages. Why is it that typically clients are given just the tax summary?
Well, we tend to give the whole thing.
Okay.
Yeah, more often than not, when we ask for the T1 General, we get the tax summary.
Yeah.
We like to give it all, but then have those summaries included at the back so you can distill it down to what those 60 pages are saying.
Yeah.
And again, your basic return should only be say 8 pages. And but you add on some rental schedules or business or what have you. So
yeah. And it's those schedules, like when a portfolio is a little bit more complex with a self-employed person who has investment properties, the lenders need to see the schedules along with that T1 jacket.
But if you're dealing with a CPA, they should be able to get you what you want pretty easily and just print that version out.
Yes, and they typically do get it to us, but we have to ask because it will come through as a summary first, and then we go back and we get the full T1.
Yeah. And what we're trying to do is have this client portal where they can access these documents and get them easier instead of having to sort of call us and find it. They got a couple years worth of documents there that you can just grab and provide.
Yeah, another beautiful use of technology.
Yeah.
So you don't have to go digging.
And then from our perspective as mortgage brokers working with, say, a self-employed client, and we request business financials, T1 Generals, and they say, oh, just give my accountant a call. Does that work? Like what do we need to do to be able to communicate with you on our client's behalf?
Well, we just need a client blessing typically to communicate. So we sort of prefer it when they sort of give it to the client and they deal with it, but we can do it directly again, just get some consent and password protect and all that good stuff and just be safe to transfer documents. But
all that good stuff.
Yeah.
So if we spin this back to the beginning of the episode, we're talking about how this topic has been rolling around our heads for a while. We really wanted to do it at this time of year because we're just starting to approach the regular tax season for people who, let's say, have a solid T4 or get their T4A or are going to be filing their taxes by April 30th. So to round out the episode, any key tips that you want to give, Murray, for coming up on the tax season, and perhaps any lighthearted accounting stories you want to share?
Lighthearted. Well, I'll start with the first one. Maybe I'll try not to think too much about lighthearted accounting stories, but I think those long winter nights is a good time as you roll into January, February, is to gather everything and segregate, your calendar year stuff, get the documents, get it organized, maybe reach out to your accountant if you don't already have a system. You can just, develop a simple spreadsheet. It goes a long way. And just to punch in things and summarize it that way. It doesn't necessarily have to be in accounting software. So if you can wrap your hands around a basic spreadsheet that, and if you get a good template from your accountant, like just lays it out nicely, nothing too wild and crazy, you can summarize things pretty quickly. It makes life a lot easier. And it also helps you sort of keep on top of it and do some planning and think about your cash flow from your property and what might be changing and what's actually happening there and, interest rates rising and what's the longer term strategy. So again, I think that might do some prep and discussion and tweak some ideas for that conversation with your accountant when you do bring your taxes in. Because I think that's the big part is like there's reporting the taxes, but sort of what is your plan and game plan 1 to 5 to 10 years for your investments. So and mapping that out and understanding it. So it's not just the exercise of filing the taxes, it's really just thinking about your cash flow around any investment. So yeah, good time of year to do it. say my analogy of trying to run the marathon the day before. So April 29th, you don't want to start this exercise. You can just kind of do it in little bite-sized pieces, monthly, getting it all tidied up, download your bank statement or something, put it in a folder, get it all nice, bundled together. Just, it's a lot easier than the sort of agony and dread of doing it all at once.
And I asked the two questions together because I really feel like there's a story here.
Well, I guess it's the last minute people, and I'll be guilty of that on certain things myself. But my friend of mine says, don't make your bad planning be my problem, kind of thing. So I think that's the key. People are in a panic for, a financing application, and haven't got their taxes up to date, and they're in a scramble, and their documents are scattered, and their bookkeeper is not available, and it turns it into a big panic. So I guess a bit of discipline to stay on top of these things, so when you do need it, it's available.
And I think the flip side of that is to say that if you've got good planning and you've got a good team around you, then when an opportunity presents itself, you're ready.
Like you've filed your business taxes and your personal taxes. Wow.
I would say for, a small business owner, especially one that's starting out, I try to advise them on having that resource around them, because they're like, oh, well, I'm just starting this business and I don't have the money, and I can do the bookkeeping on the weekends and whatever, or I can do this, I can do that. But it's like, you need to focus on your core business. Money well spent to getting a solid bookkeeper. Then you can see what's going on, instead of just like, okay, I have money in the bank or I don't, and I have no idea, like, how am I pricing my product? How am I doing? Like, pay for a bookkeeper and have someone help you maintain that sort of hygiene. And so you know how to run your business, and you're ready for taxes, you're ready for lending applications, whatever it may be. So I think that's one maybe tip for the small business owner, is to value that bookkeeping process and get someone else to do it for you, and then you can worry about other parts of your business.
I like that you called it financial hygiene.
That stuck out to me as well. Yeah,
That's good.
That was a good one.
Well, maybe I go to the dentist and they say I don't floss enough, that kind of thing. But it's like, I had someone to floss for me every day. Maybe that would help. But
Yeah, hire a tooth flosser.
That's your bookkeeper. At least you can get a bookkeeper to do that for you.
Yeah.
Nobody likes doing it, so
Exactly.
Flossing your teeth?
or bookkeeping.
Same.
And you again, get bookkeepers who are more savvy on the technology, and they can be pretty efficient. You get someone who's like a specialist in that, and they know how to run the software and download things and sort it and deal with the the exceptions, instead of just plugging through every single transaction. So
well, I think that's a wrap. That sounded good to me.
hopefully your listeners stayed awake for that one. I don't know.
This is The Mortgage Life.
We look forward to continuing the conversation.
So come back and listen.